Audio Jungle.
Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, our good friend David Morgan of the Morgan Report joins me for a conversation on a range of topics, including his 2019 outlook for a number of different asset classes, most notably gold and silver. Don't miss a fantastic preview of 2019 with the silver guru, David Morgan, coming up after this week's market update. Gold and silver markets are trading relatively quiet this week as the U.S. stock market continues to show surprising strength. It's surprising, at least to investors who expected markets to reflect growing political threats to the economy. As a partial government shutdown enters an unprecedented 28th day, economists are warning of a significant hit to first quarter GDP. It's not that furloughed government workers contribute much to economic productivity. It's that since they are now starting to miss paychecks, they will have less to spend into the economy. GDP measures the nominal size of the economy, not how productive or efficient or free or fair it is. An expected downtick in GDP, however slight, will pressure the Federal Reserve to back off on rate hikes and ready its stimulus bazookas for deployment. So in the strange world of Fed-dominated markets, bad news for the economy is being interpreted as good news for stocks. A rising stock market often, though not always, depresses demand for bullion. This week, gold prices once again traded just below the $1,300 resistance level as of this Friday recording. Gold has pulled back a bit and comes in at $1,284 an ounce to register a weekly decline of 0.3%. Silver's off 1.1% for the week to trade at $15.47 per ounce. Platinum is down 1.2% now to trade at $804. And finally, palladium, which is pulling back a bit today like the other precious metals, is still spiking 5% higher this week to record a $1,388 per ounce price. The palladium market is exhibiting highly unusual trading activity as something of a buying panic sets in over shortage fears. And as our podcast guest David Jensen last week pointed out, the explosive price action in palladium could be a precursor to what lays ahead for platinum and silver and possibly even gold. The mining industry is having great difficulty growing production. Economically viable new deposits are few and far between. Some of the majors are deciding the best way to acquire new reserves is to buy up the competition. On Monday, Newmont Mining acquired Goldcorp in a move to become the industry's dominant player.
Newmont Mining is buying smaller rival Goldcorp for $10 billion, paying an 18% premium. The deal creates the world's largest gold producer, just as easy to find gold reserves decline. Newmont shares fell on the news. Goldcorp skyrocketed. Reuters correspondent Leanna Baker is covering the story.
There's just fewer and fewer places in the world to mine for very valuable gold. So by having a bigger company, they'll have a better chance getting access to the right deposits.
The deal is the second high-profile merger in the mining industry since Barrick Gold agreed to buy Randgold Resources in September last year.
Looking ahead to next week, political bickering over how to resolve the shutdown is likely to intensify as more unpaid government employees reach breaking points. Since the federal workforce is overwhelmingly Democrat, their anger could finally push Democrat leaders in Congress to break from their no-compromise position on a border wall. Some Republicans want to be the ones to buckle first, as is their well-worn habit. But for now, Senate Majority Leader Mitch McConnell continues to stand with the president. Unfortunately for Trump's base, the GOP establishment has a poor track record when it comes to winning high-stakes fights against Democrats. Many establishment Republicans are reluctant to fight this battle at all and are quietly hoping Trump caves to Schumer and Pelosi. The one thing Republican leaders in Congress are highly effective at doing is sidelining conservatives, libertarians, and nationalists within their ranks. GOP members of Congress who refuse to support bloated deep state spending bills can quickly find themselves ostracized. Amidst the political chaos this week, House Minority Leader Kevin McCarthy found time to purge conservatives Jody Hice and Steve King from their committee positions. Hice had backed Freedom Caucus co-founder Jim Jordan for Minority Leader. King, meanwhile, was punished because he suggested in a New York Times interview that the terms like racist and white supremacists are being deployed by the left to attack Western civilization. When the government does finally reopen, the nation will be back on track. The track toward trillion-dollar deficits. Conservatives argue that spending a few billion more dollars on border fencing would save the government money in the long run. An effective physical deterrent to illegal immigration could certainly reduce costs for border patrols, apprehensions, and judicial proceedings. But of course, this government shutdown fight isn't really about the money. For Democrats, it's all about denying President Trump a political victory. For Republicans who have failed to deliver on fiscal responsibility, it's perhaps their last chance to deliver on something of great symbolic importance to the voters who elected them. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to welcome in our good friend David Morgan of the Morgan Report. David, it's always a real pleasure to have you on. Happy New Year to you and welcome back. How are you?
Well, Mike, I am well, and thank you for inviting me. It's great to start the new year with you.
Well, David, I'm excited to do a bit of a market preview for 2019 with you here today, and we'll get your thoughts on a number of different markets. Now, we managed to finish 2018 relatively strong in gold and silver. Volatility in stocks and a more dovish posture from the Fed helped create a bid for metals in December. We're now 2+ weeks into the new year. Stocks have rallied off the bottom put in on Christmas Eve. Now, we know Treasury Secretary Steven Mnuchin had a conference call with other members of the plunge protection team, and he spoke personally with the CEOs at the nation's largest banks. It looks to us like he got the response he was looking for. Somebody is buying stocks again, and we aren't too sure natural forces are behind it. At least metals prices are holding up okay. What is your take? Does the rally we've seen in stocks have legs? And what are you expecting for gold and silver and how they might respond here?
Great question. It's a very typical question, and you're certainly going to answer it. I just want to preface it with this, Mike, that we all get a lot of criticism, and I'm subject to it as well, and rightfully so in a lot of cases. What most people don't understand that aren't paid members is that anything in life, you've got to correct and continue. So if I make a call today and it sounds great and you make a decision based on that, doesn't mean that 3 days from now I'm not going to correct and continue. In other words, something I say long-term may not hold, but believe me, as long as I've been in these markets, when I'm wrong, I promptly admit it and make an adjustment. So having said that, I really don't like the trading action the last week or so. Gold just can't seem to get through that $1,300 ceiling. And silver is trading as for the last month roughly outperformed gold 2-to-1. Roughly, gold's been up about 5% in the time frame you mentioned at the beginning, and silver was up almost 10% during that same time frame. At this point in time, as we're doing the interview, they're both kind of languishing here. They don't seem to have much momentum. So I actually expect somewhat of a pullback. I was hoping for a strong January all the way through. Could be wrong. If I am, I'll adjust. But I think we're going to have to see a little bit of a downside. They did accelerate pretty strongly, as you mentioned, and maybe they got a bit ahead of themselves. Having said that, I want to be emphatic about the next statement. Longer term this year, gold and silver will do better, and they're likely to outperform the stock market this year.
Like many of us in the precious metals space, you have been paying attention to the developments of Bitcoin and cryptocurrencies. Our take is that crypto offers some real promise as honest money if developers can solve the problem of scale, if it can prove itself to be beyond the reach of governments and regulators, and if one of these coins can get widespread adoption, the world would have a medium of exchange that cannot be inflated or controlled. That would be a wonderful innovation for the cause of liberty, but those remain pretty big ifs. In the meantime, people are finding out that Bitcoin was massively oversold as a store of value. Perhaps prices have fallen about 80% from a year ago. That is our take, but we'd like to get yours. Where is crypto headed from here in your view, David?
Yeah, I'll preface it here with I'm certainly not an expert, but I study all markets. Market behavior is market behavior, whether it's soybeans, cryptocurrency, silver, or the financials, there's certain patterns and certain things that are basically natural law to market. So having said that, Bitcoin's got a struggle ahead of it to get back to its former glory. I think there's a possibility that it will. I doubt it'll be this year. There's massive overhead resistance at certain levels, and those will have to be overcome. I do hold a very biased view that it's possible, not probable, but possible that the next leg up of cryptocurrencies could be, not would be, but could be led by the gold and silver asset-backed cryptocurrencies. I think there really is a direct tie between, honest money, free money, sovereign money, and blockchain. And so this combination has been married by several innovators that are taking that idea and moving it forward by having an asset-backed or money-backed with gold and silver backing. And so I think, again, it's possible that you might see that be the next leg up. And if they were constructed correctly, then what you could see is a lot of demand coming into those as a store of value and money itself, meaning a means of exchange. So, I know that's a big statement, and you prefaced it the same way, Mike, which I'm grateful you did. But let's not hold out weakness. Let's come from a position of strength, which means that the possibility exists, which means that, the market itself, if it likes and adopts the idea, it could go a lot further than perhaps we are at this point in time thinking about.
You've got an interesting point when it comes to the privacy of crypto versus precious metals. Will someone planning a transaction find more privacy at a Bitcoin exchange or at a precious metals exchange?
Well, I have fairly studied on this, and my study comes from the guys at the top, people that are most aware, astute, and knowledgeable about Bitcoin. I mean, there's a lot of people at the Anarchapulco conference that are much better versed in the cryptocurrencies than I am. And I'm a lifelong learner. I love to learn. And I've learned a lot from these people. So basis that, and some, I won't name, I was going to put some names out there, but some of the top people basically have said, in all honesty, that if you think that, Bitcoin and these cryptos are absolutely anonymous, think again. Now, that doesn't mean there isn't some anonymity to it with keeping your wallet offline and all this other stuff. But it's still on the blockchain. So if some agency really wanted to find out what was going on, pretty much most of the time it could be done. Whereas if you take a gold coin, a silver coin, or coins, and you make a transaction with your neighbor for an automobile or a piece of fruit or what have you, that's a pretty much anonymous exchange. So, from an absolute objective perspective, really trading money coins for some goods or service is a lot less traceable than something that's done on the blockchain, at least at this point in time, as far as I've studied.
Switching gears here a bit, obviously the environment for the metals and the miners hasn't been too great over the past few years, and the miners have really had a tough run. You've got to think we'll continue to see more mergers happening in the space in the coming months as some of the stronger companies look to capitalize on the soft environment and look to acquire more mining operations on the cheap. Now, we've recently been hearing about a big merger between Newmont and Goldcorp, and I wanted to get your thoughts on that. What did that say to you, and what do you make of that deal, David?
Well, Mike, I hate to throw another name out at you, but I know you're pretty forgiving. I did an interview with Kitco on that exact question, so people are interested on an in-depth take might check Kitco News from a day or two ago, and they'll see my exact response. But overall, Mike, I am not favorable to it. I'm not sure that the Goldcorp shareholders are getting the best deal available. And even if they are, my broader view is this. It's like the banking sector, which means the more and more power that's put in the fewer and fewer hands, the less flexibility the system has, so it becomes more fragile, and it's also got more control. It's sort of like going from a bimetallic standard where the bankers had to honor both gold and silver as means of final payment to a gold-only standard where they had a lot more control. So I don't really like it from that perspective. The other part is that once you're that big, it's extremely difficult to continue at that size, at least in the gold industry, because barring a breakthrough in technology, which I don't rule out, in fact, I'm quite aware it could happen, well, I think we're really at peak gold. So it's going to be more and more difficult for these huge conglomerates in the gold industry to continue to find the deposits that they need to continue their production rate. In other words, the rate of gold coming out on an annual basis will be very difficult to achieve year over year over year, just going out a few years.
Oil appears to have finally bottomed out in late December, and it's had a really nice run since then and has gone from roughly $42 a barrel to $52 or so over the last 3 weeks, roughly. Is this the start of a new bull market in commodities led by crude oil, David, or is this just a dead cat bounce? Basically, what do you see ahead for oil here?
Very tough call. There's not enough data. I'm neutral to positive in oil this year. I mean, my big picture is that we're having to slow down economically on a global basis, which means that energy moves everything. There'll be less demand for energy. However, there'll be exceptions to that. And also, we don't really know what can take place geopolitically. I mean, oil is quite volatile when you factor in tensions in the Middle East and the geopolitical climate that we're all under, where there's all these problems out there regarding not only the Middle East, but China and the saber rattling between their islands out there they built, where there's conflict, potential conflict, and then bringing Taiwan back into China. And I mean, there's all kinds of red flags out there. So oil will react to that if there's any disruption or any geopolitical situation or a war that's unwinding flares up again. So very tough call. But as it stands today, I'm neutral to positive. I do like the energy sector a great deal. It's the most important sector we have as commodities. As you alluded to, Mike, when you see a strong oil market, you usually see it pull up most of the other commodities. Copper's been pretty weak. I don't like the copper chart. And copper is not as good an indicator of global health as it used to be, in my opinion. I really think oil is a better barometer. But if you do use copper, what it's signaling right now is, so far I'm correct, meaning stagflation, which is higher prices, especially for things we need like food, but slower economic activity. So a slowdown in the amount of production, but a higher cost to get those things.
Obviously, when you talk about oil, you also have to talk about the dollar. What's your outlook for King Dollar in 2019?
Another tough call. It looks like it's topped out. It looks like it's going to get somewhat weaker overall, but we've got to remember the dollar has a lot going for it still, not only as a reserve currency, but it's one of the currencies with the biggest bond market, and it's got a positive yield, and the yield's being increased because the Fed's increasing interest rates. So there's a lot of appeal to the dollar still. So I'm basically neutral on the dollar, and I'll make another call as things change.
And then how about gold and, more importantly, silver in 2019? Will we finally get some tailwinds with these other markets, stocks, the dollar, oil, and might that help the money metals catch a bid this year?
Well, absolutely. If I'm correct in my overall analysis that stagflation is basically the meme for the year, and that means a lower stock market from this point to the end of the year, and it'll go up and down and fluctuate. All markets do. That will put more impetus into the commodity sector. But again, if we have a global slowdown, then the top tier of the commodity sector, which is money, gold and silver, will be the best assets to hold. I think we had a pretty good prelude in December, and I know I'm rehashing old ground to make this point. Since silver outperformed gold almost 2-to-1 in that 4-week, 5-week time frame, that's a pretty good clue that going forward this year that we'll see something similar, which means the gold-silver ratio will finally come off that peak of 85, 86, and maybe move down to the 70, 72 level, or better. It's hard to say at this point in time over the year. So that means silver will outperform gold this year, and that is a very, very prime indicator that we are back in a precious metals bull market.
Yeah, you always say that you like to see silver lead when the metals are moving up. Now, how about palladium? Gosh, I mean, we talked a lot about palladium here on this podcast over the last month or so. It's this amazing outlier that just continues to go up and up. Obviously, there's lots of issues there when it comes to supply, and the lease rates have been exploding in the futures market. We talked last week with David Jensen about it and how that could potentially maybe break the exchanges as people start to realize that there's just so much unbacked paper here in these exchanges. What do you have to say about palladium? What might that mean for the other metals markets?
Well, I'm going to pat myself on the back and then slap my face at the same time. I got all of our people, the paid members in the Morgan Report, in palladium at the right time. I unfortunately got out in January last year around the 1,100 mark. And obviously, with 2020 hindsight, I wish slap my face that we had held another year. I did a write-up in the current issue. And as far as disrupting the markets, it already did. It's an absolute fact, and people can look this up, that when Ford Motor Company switched their automobile line for their catalytic converters from platinum to palladium, and they work in both diesel and gas, believe it or not. There's some tweaking that goes on. I don't have time to explain that. So Ford just basically made this massive order for physical palladium, and basically it disrupted the market to the point where they had to, for all intents and purposes, close it down. And palladium, you can look at the chart, went off from like in the hundreds of dollars to 1,100 almost straight up. And that shows you, what a small market palladium is, and two, that physical demand can absolutely take control of the market. And it did. So this could be a replay. I haven't listened to David Jansen's latest interview. I think I listened to one a while back. And I think he's pretty spot on. I don't want to vouch for him, but the idea is correct. I mean, if you have physical demand in one of these commodities, to me it's always been absolutely ridiculous that platinum and palladium are even on the futures exchange. I'm going to digress a little bit further, Mike, if you allow me, but I've been through some of the depositories that are COMEX approved. And one such facility, I had a really great tour, and one of the caverns within this huge vault was basically held for palladium. And the owner opened up and showed me the shelves holding these palladium plates. And that was kind of the end of the tour. And I started thinking about it at lunch, and I started to kind of do some calculations in my head. And what I realized in just that rather sizable vault, the amount of palladium that I looked at was like probably 50% of the physical palladium on the planet. And, you know, I mean, think about it. I mean, think about how small a city is relative to the world itself. I mean, I don't know. I digress, but it kind of stunned me when I thought about how small these markets really are and how important that metal is. I mean, that metal and platinum, they're both very important metals. So I digress. I'll come back, Mike. Go ahead and shoot me another question.
Yeah, that's quite an amazing market and very small. You think gold and silver markets are small. Gosh, the platinum group metal markets are even smaller. Well, as we begin to wrap up here, David, give us your outlook for the economy as a whole. Maybe touch on some of the other key events or storylines that we haven't touched on today that you're going to be watching, whether that be Fed policy, the government shutdown perhaps, a possible reversal of Brexit maybe, strife in France and other Euro nations. Basically, what are you watching? And give us an idea of how you see some of these stories unfolding here in 2019, or mention anything else that you want to touch on as we close here today.
Oh, well, that left me wide open, and thank you. I think I want to do more from a philosophical standpoint. We are in a vast sea of change right now globally. I mean, we have huge geopolitical forces, and they're both kind of at extremes, at least in the United States. The two ideologies are vastly opposed, and all this is leading to a vast change that's taking place. And I think we're going to see a change, maybe not in this year, but going forward, on the economic system, on how nation states interact with each other, maybe even on the monetary system, and politics in general. We're basically seeing a shift from top-down command control back to sovereignty of individual nation states. This is what Brexit's about. This is about nationalism, all the stuff you hear. And there's numbers of people and ideologies opposed to that. So that will continue. And that means more and more change, probably more and more rapidly, and more disgruntled and unhappy populace. So I expect to see more of what we've already seen, and I expect to see probably more disruptions than anyone really wants. And this is, to put it in a metaphorical slant, more like birthing pains. This is a painful thing for a lot of individuals, and I'm not talking U.S. only. I'm talking on a global basis. China seems to have the most command and control, and their citizenry, for the large part, seems to be accepting it for the most part. There are, of course, resistance. You don't hear about it because if you say too much, you get a lowered social credit rating and you're penalized. So they have implemented a system that's basically totalitarianism at its finest, meaning that they have absolute control. And it isn't quite absolute, but pretty close. So lots of things that concern me greatly, Mike. A lot of people that are still kind of unaware of the big picture of what this means in the near term, meaning the next 5 years or so. And most are unaware of there's something going on well beyond the political back and forth between the left and right paradigm, which is more meaningful and people are more or less sleep about. I mean, you've got the 5G network, which disrupts DNA. You've got climate situations, which are unnatural, to put it in polite terms. You've got GMO foods, which are disruptive, again, to the human biological system. You have never-ending, ceaseless invasion of your privacy through different means, primarily your smartphone. And you have a lot of things that are absolutely, in my studied opinion, more important than just this political back and forth that we're continually inundated with. So what I would leave with this for 2019, look at what you can control. Look at your health, what you're putting in your body, what's healthy. Look at your mental state. Keep a good attitude and try to, focus on something that you're grateful for at least once a day. And look at what you really have, because when I was in China, I picked up a phrase that I still continue to say to myself almost on a daily basis, and that is the emperor is very far away, which means to me that even though the political system may not be to your liking or whatever, how much does it really affect your day? I mean, you get to make your day or create your day in some way. I mean, people that are working for the man or whatever, obviously you've got a job, maybe you don't like it, you've got to attend it, blah, 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 blah. But there's still things you can do. You can make a lot of choices during that day to improve your lifestyle. So I did want to get a bit philosophical, Mike, because we're in very, very stressful times. People that don't understand it feel it, and that's a strong belief of mine. It's like a lot is going on, and I've outlined from the top down what I think is the most important to focus on. That doesn't mean it is. But what I am suggesting is a lot of people that may be blind to the overall bigger picture sense just the same that something isn't right with what's going on. The last comment I'll make is I'm not much of a TV watcher, but I specifically tune in 60 Minutes and listen to this Chinese gentleman, and I've already forgot his name, but he talked about AI. He's an expert in AI. And how over the next, I think he said 20 years or 10 years, you'll see 40% of the jobs right now will be taken over by AI. Primarily the one he mentioned that was, I think he's correct, is anybody that drives for a living, long-haul truckers, people driving, water trucks or trucks with gasoline or florist delivery or any of that stuff. That alone is huge. So lots of change ahead of us. Keep a good attitude, stay healthy, and have a strong faith, whatever that is. So I'll close it out there, Mike.
Well, very well summarized. A lot to digest there, and well said. Well, outstanding insights as usual, David. It's shaping up to be an incredibly interesting year in the markets, and we look forward to following it with people like you here on our weekly podcast. Now, before we let you go, please let people know how they can learn more about the Morgan Report and what it is that they'll get if they sign up to become a member, if they want to hear and read what you and your team have to say about all these markets events as things play out here in 2019 and beyond.
Well, right now, the easiest thing is to get on the free Morgan Report newsletter, and that means just go to themorganreport.com. and give us a first name and an email. I do have a Twitter feed at SilverGuru22. I have a YouTube channel. It's called The Morgan Report. If you're on the free email list, we're making a change this year in 2019, Mike, and we do make some offers in there. Sometimes it's from dealers like you that do a great job of providing silver at a lower premium. Sometimes there are other competitors in the newsletter industry and that type of thing. But what we've not done, and we're changing, is that every time I do a market update like this, we're going to put it out like that day or the next day. So if you sign up for the free report, you're not only going to get my weekly summary that comes out every weekend, which is a wrap-up and saves you a massive amount of time for what's important in the financial system, but you're also going to get every interview I do as they become available. So you'll not only get offers that you may or may not like, you'll be getting update information as quickly as we can make a turnaround from an interview or a podcast or something that I write or some video that I make or something like that. So you should be getting more information from me in a more timely manner in 2019 than we've done in the past.
Yeah, well, very good. Something that everybody should take advantage of. Thanks so very much for your time, as always. All the best to you in the new year, and appreciate it. Thanks very much, David.
It's my pleasure, Mike. Thank you.
Well, that will do it for this week. Thanks again to David Morgan, publisher of The Morgan Report. To follow David, just visit themorganreport.com. We urge everyone to, at the very least, go ahead and sign up for the free email list, as David was talking about there. Start getting some of his great commentary on a regular basis. And if you haven't already, be sure to check out David's recent book co-authored with another good friend of ours, David Smith, titled Second Chance, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave, which is available at moneymetals.com and other places where books are sold. Be sure to check that out. And don't forget to check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.